Hello, hello, hello. Today is January 1st at 7 p.m., so we're on overnight trading hours. But it's the end of the year recap, so I figured we have a little bit to talk about today. Talk where the portfolio is at, what changed over the span of a month, because a little bit did go on, and where our positions are sitting at. So the portfolio today is at $16,426. So that's up $57 in this initial spike of overnight trading. So we're at about 16,370 to end the month, which is pretty substantial. It's a little higher than last month, but this did mark one of our first months where we actually did have a market loss, which is very interesting because for the last 2 years, the market has just continued to rally with very little changes. But now it seems like maybe we're slowing down a little bit, which I would describe as sobering. I find that interesting and feels a little nice, honestly, because not everything can just increase exponentially day by day, month by month. So slowing down a little bit, being down 0.75% in the month, was a down about 1% before this overnight trading spike. But that isn't very much to be down. I mean, I would more or less call that a neutral. It's within two variations of zero probably, so it's pretty fair. But this chart is pretty telling. We did see like an incredible substantial gain in that like first half of December, and the portfolio actually did touch $17,000 very briefly. That was a nice milestone. That felt good to see because honestly, I didn't think we might see that for a little bit, but the market had different opinion. I mean, it was up 3% to begin the month, which is just incredible growth. But then, if you go along, let's see here, this is about December 18th at 1 p.m., which market is about closing there, and the Fed decides to have their meeting for the month, and they basically said, hey, when it comes to inflation, we didn't quite perform where we wanted to be. It's a little higher than what we are expecting. It's about that 3% range. And they were hoping it was more about 2.7, 2.8. So that was obviously one thing that the market didn't like to see. That inflation is still very sticky in some parts of the economy. But additionally, they gave some insight into next year where they said instead of maybe four rate cuts, they're going to do rather 2 to 3. And that's probably what shocked the market the most because nobody wants to hear that we're going to slow down our rate cuts because that means that it's going to cost more money for companies to borrow and finance their new projects, which just hurts their bottom line, reduces their profits. That messes up the whole cash flow, which messes up the valuation of their company. And we saw just a bunch of stocks drop that day. I mean, we went from being up 2.83% for the month to being down 0.66%. So that's about minus 3% in one day. And I mean, I definitely felt that with my QQQM exposure. Companies like Google, Nvidia, Amazon, Meta, Apple just absolutely tanked. And I mean, considering let's see, I was up about 470, and then I went down 109. I lost about $600 that day. So not the best feeling, and especially after we just hit 17,000. So a little bit of a setback. But then we saw a little bit of a pull back up that next day, and then it dropped again. And we were kind of toying with the idea of falling below 16,000 here. And then the market decided to rally further, almost back up to 17,000, and then come back down for the end of the month, which is not very expected. Everyone thought the end of December would just end on a high note and people will be putting more and more money into the market, but I don't know. It seems like we just didn't quite live up to those expectations. So this month was very interesting, and I think it's nice that we slow down a little bit, get our expectations in line, don't get everything overvalued like I think it has been. So I don't know. That's just my opinion on it. I think this month overall was just good to see. We're looking at some different time frames of the portfolio here. You can see that overnight we got 0.23%, so that's nice to be able to see. Just a little spike to the day. Over the last week, that's down $476, which is 2.82%, which is the end of the month kind of fall that we saw. Month was down 0.76%. 3 months were still up 5.4%. So quarter wise, still doing incredibly great. I mean, 5.5% now. That in 3 quarters, well, in 1 quarter, that's, I mean, just incredible. Great growth. And then if we look back over the year, which in reality starts from May, so about like 7 months, we're up 13.82% in 7 months. I mean, 13.82% in an entire year is great. So being up that in just 7 months is amazing. And now that we're finally starting the new year in this account, I'll be able to properly see how we're, doing over the year instead of just having to guess and look at my own chart. So that's definitely something that's nice to see. But I mean, $16,420, no complaints. The portfolio, since I moved to Robinhood, made $2,000 just off market gain alone. So that's just great to see. Overall, very happy with the progress we're making here. We can see that our contributions are reset for the year. And this is something interesting that I was looking at with Robinhood, that if you have a recurring buy, recurring deposit, that automatically goes towards 2025 contributions. So I had to stop my automatics. I'm going to have to manually do it every single Monday, which sucks because I got to do that for about 4 months and 2 weeks to April 15th. And I'm doing that because when it comes to 2025 contributions, I do want this to be the first year I max it out. And that's because I'm graduating. My income has increased substantially, which means I will be able to hit that $7,000 invested mark. So, I mean, any money I put in 2025 rather than 2024 is simply just reducing the amount that I can contribute next year, which just hurts my overall value. So, I got 4 months that I can still contribute towards this year. Just had that standard weekly deposit, maybe a little extra, nothing too crazy. But then starting next year, I think it's going to be a lot of fun. I'm really looking forward to just actually maxing this portfolio out, putting over $100 every single week into it. It's just going to be fun to see. But yeah, I mean, we can look back at 2024. When we transferred over to Robinhood, we put $1,800 in, and the IRA match alone is $53.88, which is nice to see because Robinhood Gold costs $50. So that alone was break even. And that doesn't count benefits I get from being a Robinhood credit card holder. You got their APY. They do that 1% deposit boost also. Well, they did it, now they canceled it. But all that extra money is just value that I'm getting out of the membership. So going into next year, we're going to be able to put $7,000, which is $210 worth of just IRA matches alone, which is 4 times the value of the subscription. It's looking very bright in the future. I'm really excited about that. So, with all that being said, let's get into some noteworthy news that came about in this month. So, first, looking at Google, let's just see how their performance did this month. So, yeah, they have a little jump in there overnight, too. We can see minus 3% in the last week, which is what we saw as the general market did. But over the month, they're up 11%. And that's interesting because a lot of other tech stocks were just increasingly hammered, and we can see even Google had some large pullbacks in the end of the month. But overall, over the month, Google's up 11%. And why is that? It's because they decided they're going to drop a bombshell on the whole world by introducing their Willow chip, which is a new era of quantum chip computing. I'm not in this realm at all, so I can only speak so much on it, but they do have two great highlights here. They said that Willow can reduce errors exponentially as we scale up. So as they have more Willow chips involved in the same computation, it just kind of reduces the error overall as it self-corrects, which is a big issue with quantum chips. They can act very fast, but they're also very high in error, so the accuracy is just kind of poor. And you don't want that to be the fact when you're, computing very important concepts and very little margin of error. So the fact they've been able to fix that, that's very big. That's one milestone alone, and definitely supports the reason why the stock jumped for the month. But additionally, they just, put an absolutely substantial benchmark here where it's magnitudes faster than its competitor, which is kind of what we're expecting to see, this exponential increase in computing speed and accuracy and reduction of bias and lowering the error rate. So I think Willow is, quite frankly, very, very good for the future of not just Google, but the entire world. So with that being said, I did actually start buying into Google, which is very out of character for me. I'm more of just a index fund guy, and you can see that if we look at some of my index funds here, we got 49.1 shares of QQQM here, which is $10,374 of my $16,400 portfolio. But also when it comes to VUO, we got 11.16 shares, which is $6,000. So basically, my entire portfolio is made simply off of index funds. But now I've kind of changed my tune a little bit. After I saw this Willow news and I saw that the stock jumped so much, honestly, 10% is a great increase. It's billions of dollars for Google, but I don't think it properly was evaluated in the market. So 10% for any company is very substantial and requires us to take a look at it and see. In most cases, that's probably too much, honestly. I mean, a 10% jump in Tesla for something, for example, you have to have pretty good reason behind it. 10% jump in Nvidia, nah, you don't really need a reason, honestly. It just jumps 10% every other day. But when it comes to something like Google, 10% increase in their stock price is a lot because Google's been around for a decade, two, for a long time. They have, very backed up and reinforced balance sheets. They've had steady cash flows. So what alone can jump 10% basically within a week or two of Willow, which I think is definitely fair, 10, 11%. But the amount of computing speed you're going to get out of this, they're going to be able to reduce the amount of people they hire. When you incorporate this with AI, they're going to be able to fix a lot of their own solutions. They're going to be able to employ AI agents in their system, reducing their HR that's needed, reducing people that are on the other line of the phone, just helping the average customer. So I don't know. I think 11% just incredibly low. But even with that being said, Google we can look at as a company. They have like a relatively lower PE compared to the other stocks. We're seeing high 30s, 40. You get something like MSTR, you're pushing 100 on PE. But when it comes to Google, they're only trading at a 25. And only a 25 is kind of comical because that alone as a number is pretty high when it comes to price to earnings ratio. But when it comes compared to all these other big tech giants, it's like the only affordable company within that like NASDAQ 100. So I think it's at a fair point. It has a very optimistic future. Even with the possible Chrome spinoff, your shares will be spun off into another sub company and you'll get equity in that. And overall, when a spinoff happens, it's better for both companies. And when everyone heard Chrome was being spun off, they actually sold off Google, which I think was another misstep for the market. So I'm going to continue this. And we'll see when it comes to the end of 2025 how I feel about my position. But any extra money I'm putting into Google. And when I start maxing out this account, I'm actually going to try to make it more of a substantial part of my portfolio rather than just being that kind of stock that I'm putting my extra money into. So, I mean, besides that, we can look at a company like Salesforce, ticker CRM. They've done probably pretty well this month. Well, only 0.83%, but you can see initially jumped 11%. And that kind of came with the news on December 3rd where they're releasing something called Agent Force. And that's kind of the reference I said to agents. Basically, it's having an assistant powered by AI helping your customers, which is a little dystopian and futuristic in nature, but the point does stand. There's a lot of value in something like that. There's a lot of smaller businesses that rely on Salesforce. I worked for one where it has a lot of customer data. It knows all their information. You have that all in your database. You have all their files. And if Salesforce can access that, apply to AI also, when a customer calls, they have complaints, instead of being just put to a chatbot maybe that is very poor, everyone hates chatbots when you get on the phone. If you'd rather have something like an agent where you can talk to it online, maybe if you could interface it through the phone, that would be quite nice. I think there's just a lot of value. This is going to be a big point of recurring revenue for Salesforce, which helps their overall cash flow, which raises up their enterprise value. So I can see why the stock jumped greatly, but then it seems like from being up 11%, they basically just reduced all their gains for the rest of the month, and they're only up 0.83%. I mean, we can look further out. In the last 3 months, 22%. So you can kind of see where that, I mean, the news of Agent Force came out earlier, but it was more as recognized this month. So you can see where that increase in valuation came. If we look at the last year, Salesforce was up 28.35%, which is largely in line with the general market, but I don't know. I think it's a little bit at a high valuation right now for me, but it was very interesting to see that come in the news. And quite frankly, I think it's going to have a large ripple effect for tech stocks in general. Last company I wanted to point out today was Amazon. Seems like they have a little jump in their overnight valuation too. Let's look at last month. Last month they're up 4%, which is good considering the market was down about 2 to 3 as a whole. And this came from the news that they're just putting a large amount of R&D into AI. Um, Bezos actually revealed he's still very involved in Amazon, which was to surprise everyone. Everyone thought he's just on his yacht with supermodels drinking tequila, basically. But rather, the guy is working more than before, still very involved in the company, which people like to see because, quite frankly, Bezos had the vision to make the company what it is. And if he stays on board, at least he can help steer the ship. So overall, sentiment increased in Amazon, raising up its value, although nothing directly regarding its cash flows increased. People just like to see that Bezos is kind of still on board with the company and supports it. We can talk about how the market did overall throughout the year. So the S&P was up 24.48%, which, I mean, for a year, that's just incredible. I don't think anyone's going to argue for that. So if I believe it was, supposed to be up that much, that's something else completely. But nonetheless, incredible growth. And then you look at something like QQQ or QQQM, up 26%. So even more so, tech stocks had that slight edge, which that's why I'm more involved in QQQM because it has a higher beta. I think it's going to move just proportionally higher, and then on lower years proportionally lower. But overall, I think it just has better returns than something like the S&P. And I'm kind of sticking with the idea considering the future is definitely tech-based and will continue to be tech-based as everything becomes more digitalized and relying on technology. And AI is making all the news these days, and for good reason, because the world's going to rely on it in many parts. So no matter what I do, whether it's buying more individual stocks or still have an S&P exposure, I'm going to aim towards stocks and overall equity exposure in the tech market, whether that's just through QQQM, my Google position I want to keep growing, maybe something like Salesforce or Amazon in my portfolio. That's all to be seen. But nonetheless, I'm kind of betting on the future that's going to be more technology based. And when it comes to my Roth IRA, I think that's kind of the direction we're going to go in it. I do have a 401k growing right now, but I'm going to wait till my match comes about in that portfolio to reveal it. But shocker, it's basically just S&P exposure. So nothing crazy. That's going to be kind of the more steady account. And then we're going to have some more fun with this in the coming years. So only other thing I wanted to talk about in the news today is that Robinhood did this New Year's Eve thing where they gave some equity back to the users of their platform. Yesterday it was $5 worth of Doge, and somehow I ended up missing that, even though I was very on about the timer of it. And today, if you had Robinhood Gold, they gave you, I think it was about $8 worth of Bitcoin. I can see in our Bitcoin history, I mean, yeah, I'm not sure about the equity exactly, but it was about eight bucks that they gave into your crypto account worth of Bitcoin. So, I mean, that's nice to see. We already talked about the value that I get from Robinhood Gold. Well, I mean, if it's $50 every year, take off another $8, so $42 a year now. And then that's just widely outpaced by all the benefits I get by it. So we're going to stick with Robinhood Gold. I think I made a good choice switching over to the platform, and we're just going to keep trying to capitalize on the benefits they're giving, at least now. If they'll continue to be this good in the future, that is definitely to be seen. But nonetheless, if they're going to give me free money and hang a golden carrot in front of my face, I'm going to take it. I don't see why anyone wouldn't do that. Maybe if you're hesitant on the platform or Vlad's control the company and the direction he's heading in, okay, sure. But I think if you're going to open up a new account right now, Robinhood is almost a no-brainer. They're on the bleeding edge of all this technology. I mean, they basically revolutionized trading with, free trades. Not talking about market spread, but I think overall the company just has a really good future, and we can kind of see that in their stock price. We talked about my position I had and how I definitely sold out early. Well, look over the last month, not only are they positive, they're up 0.29%, which is pretty substantial, but over the year, they're up 200%. So, I was pretty optimistic when I came in Robinhood, and that came around May. So maybe I should have put my money where my mouth was and bought in at $18, considering now it's at $38 and could have doubled my money. But, you know, educated risk, hopefully, and try not to over leverage myself in an individual stock. So I guess to close the video, we'll go over some of our portfolio details. We can see the chart here. Since I turned 18 when I opened up my Roth IRA, we're at $2,200, and now if we look over here, we're at $16,400. End of the month, we're at $16,377 to be specific, and we only had a contribution amount of $11,429. And we can see that broken up a little more when we look at our positions over here. I'm trying to fix this page up, make it look even better, but we do have our positions up here. We have QQQM, we have VOO, and we have Google also. And we can see these values individually. We talked about them a little bit, the share amount that we had. We do have cost basis, which helps us estimate our profit. And we can see overall between all these positions, we're up $3,200 just on our open positions alone. We do have some closed positions, which I talked about in our last video. Overall, those were really good buys, and if I could replicate that every single day, I wouldn't have to work a normal job, but I am not that good at picking stocks. So, some final numbers we can look at. Contribution total for this account, we put in $11,429. Our value stands at $16,377. We're up $50 from that right now if you want to consider that. But that leaves a profit at $4,900.47, which that's a crazy amount. I didn't think I'll be that high right now in my account, but it feels good nonetheless, and that marks a 44.87%. And if we're going to look at that just numerically alone, that's great. But considering the fact that I continually added my positions into this account, that number is just incredible. Another time we can look at it and benchmark it against the S&P, but I think it's overall very in line. And if we considered weighted average of my contributions, whether that be like 60% or something like that, it'd probably be up there. It'd be a lot. And then finally, we can see our little pie chart here. QQQ, that's 63.2% of our total value. VOO, that's 36.8%. And Google, being my new position, is 0.1% of my total value. So incredibly low, even though I have about $14. So that's a good feeling to say that I can have $14 or something, and that's only 0.1% of all my positions. So I really have no issue just continually adding to it, because obviously I'm not at risk of being overexposed in it, especially because I already have exposure with my ETFs that I'm in. But I'm excited to see that grow. So overall, we're going to be putting more money, trying to get that VOO closer to maybe like 38% now, and get Google close to something like 2%, which would be over $300 probably. So we have some good benchmarks that we can aim towards, and I think we're going to hit a lot of what we're hoping for this year, and that's because of contributions alone. So even if the market would be down 10%, $1,600 for the year, just put that out there. If I'm going to put in $7,000, we're still going to be up. So no matter what, I believe next year we're going to be over $20,000 in the account, which that's an incredible milestone. Hopefully we hit it sooner, and I can maybe pop a little champagne in the background and some confetti. That would feel cool. But right now, it feels good that no matter what, by the time 2026 rolls around, we're going to have $20,000 at least in this account. And hopefully that can go maybe up to $25,000, which would be a quarter of the way to 6 figures in the account. So, with all that being said, thank you guys for tuning in today. I think I'm very happy with where we're at in this account, and I'm looking forward to documenting it month by month with a lot more news hopefully in the future. So make sure to like this video, subscribe to the channel, tune in every single month. I have other videos planned just besides these portfolio recaps and hopefully we can branch out and do a little more of the news segments and stuff like that. So thank you guys for watching and take care.